Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the world of corporate finance by turning mountains of paperwork into bite-sized insights for you. Today we are looking at SideChannel Incorporated's latest filing, and let me tell you, it has a bit of a twist, a bit of a do-over if you will. It's not a typical financial report, but it's certainly important for shareholders. Before we dive in, make sure you are subscribed to the channel and join our Discord community linked in the description below. Let's get straight to it. SideChannel is making a change to its stock. Think of it like taking a bunch of smaller pieces and making them into one bigger piece. This is called a reverse stock split. So what does this mean for the company and its investors? Well, the company's board of directors has decided to do a 1-for-52 reverse stock split. This means for every 52 shares of common stock you currently own, you will end up with just one share. They approved this change way back in February of 2025, and then the board officially decided on the exact split ratio of 1-for-52 in August of 2025. Now, on the 12th of January 2026, they officially filed the paperwork to make this happen with the state of Delaware. This change will become official for legal purposes at 4 p.m. Eastern Time on the 22nd of January 2026, right after the stock market closes. The idea is that when the market opens on the 23rd of January 2026, the company's stock will be trading on this new split basis. Now, here is where it gets a little interesting and why they had to file another document. Initially, when they described how they would handle any leftover tiny pieces of a share, called fractional shares, they said they would round it to the nearest whole share, but they realized this was a mistake. They actually intended to round those fractional shares up to the nearest whole share. So on the 16th of January 2026, just a few days after the initial filing, they filed a correction to fix this. This is important because rounding up means anyone who would have had a fractional share will now get a full share, which is generally better for the shareholder. So to recap, after the market closes on the 22nd of January 2026, every 52 shares of common stock will automatically become one share. Any fractional shares that come up from this calculation will be rounded up to the next full share, and the stock will start trading with this new share count on the 23rd of January 2026. It is important to note that this reverse split doesn't change the total number of shares the company is allowed to issue, nor does it change the value of each share on paper. What it does is reduce the number of outstanding shares, which can sometimes make the share price look higher and potentially attract different types of investors. The filing also lists out the specific documents that are filed along with this report. The main ones are the Certificate of Amendment itself and the Certificate of Correction we just talked about. And finally, the report is signed off by Brian Hawgley, who is the Chief Executive Officer of SideChannel Incorporated, confirming that this information is accurate and being reported officially on the 16th of January 2026. Now, let's talk about what this actually means for SideChannel. A reverse stock split is often done by companies whose stock price has fallen very low. The goal is usually to get the stock price up to a level that is considered more respectable or to meet certain stock exchange listing requirements. For SideChannel, this move seems to be about making their stock look more attractive and stable. It doesn't fundamentally change the value of the company itself or the total value of your investment overnight, but it does change the number of shares and the price. Per S-Hair, the fact that they had to issue a correction shows a slight hiccup in their process, but the correction itself is favourable to shareholders by rounding fractional shares up. This suggests a company that is trying to manage its investor relations carefully. The challenge now for SideChannel will be to demonstrate that this change in share structure is part of a larger strategy for growth and improved financial performance, not just a cosmetic fix. They need to show that the underlying business is strong and has potential to its shareholder value going forward. The absence of detailed financial tables in this specific filing means we can't do a deep dive into their revenue or profits today, but the most important takeaway is the stock split and the correction of that fractional share handling. Alright, that is our breakdown of SideChannel's latest report. What is your take on this reverse stock split and the subsequent correction? Do you think it is a smart move for the company? Drop your thoughts in the comments below. If you found this analysis helpful, please hit that like button. It really helps us out, and subscribe for more regular dives into these corporate documents. Don't forget to join our Discord community. The link is in the description. Thanks for watching, everyone. See you next time.